Hello, everyone. We're going to talk about the biggest pitfalls in attracting international money. Who here is an entrepreneur? Has raised funding from international investors? Good. That's 2 out of 100. We've got exactly the right audience in place. So all of you who haven't raised money from international investors can avoid these pitfalls. So let's just quickly go through a short introduction, who you are, briefly, 30 seconds, and what your connection with international money is. Tim, why don't you start?
Timm, Schipporeit, Index Ventures, London-based VC fund. We're investing out of 2 funds globally in the US and mainly in Europe across consumer and B2B. We invest out of a 550 million venture fund and a 750 million growth fund. We've been backers in the 2000s of companies such as Skype, more recently companies such as Just Eat, Criteo, and companies that are currently in our portfolio are Deliveroo, BlaBlaCar, and have also made a number of investments here in Berlin, such as SoundCloud, Moehring, and a couple of others. So happy to be here, and thanks for having me.
Great.
My name is Friedrich Neuman. I'm one of the co-founders of Makers. I'm an entrepreneur, actually turned investor. I've been building companies for the last 10 years of my life. I built 4 companies. 2 of those companies were flops. One company was cash flow positive, quite highly profitable. And now I'm running the 4th company, which is Makers, a company builder. So we build and invest in early-stage startups, pre-revenue, pre-traction. We invest money. We like to syndicate with other business angels and to increase the size of the check. In terms of strategy, how we invest, we like to invest in Berlin-based startups. We like to invest in startups that are close to cash, that can become profitable quickly. And we also expect, and we would like to see in the founding team is like a technical co-founder. So usually someone is taking care of the business side and someone who's like the software developer. And we actually are very also industry agnostic. So we invest in everything that we see it can make money and it can be profitable. Most importantly, we expect that the entrepreneur is bringing the expertise on board. In terms of raising international money, 2 of our portfolio companies, we have 8 portfolio companies in total. Cashboard raised money with 500 startups in the US, and we have also Purdue raised money with Innovation Nest in Poland.
All right. And John.
John Fontein, I'm VP of Business Development at GoEuro. We are a travel meta search engine focusing on multimodal travel. That means we compare rail, bus, and flight options from any city to any city within Europe. I've been at the company for 2 years now. Prior to the role, I spent 7 years in the investment banking division at Goldman Sachs. I actually met our founder on a business trip, on a due diligence trip I took to Berlin. My role at Goldman Sachs was to look at exciting early-stage startups that would be potential investment targets for either GS's balance sheet or its most important high-net-worth clients. GoEuro happened to be a very exciting target opportunity for the firm. And actually, Goldman Sachs led our Series B funding round, which we announced last December. And I decided to join the dark side before the Series B round. So I have experience both kind of on the receiving side of funding and also on the investing side. And I started my career in the music industry as a writer and a music producer. And I've also sold 1 company in the music industry.
All right. So let's get to the chase. In 1 sentence, what is the biggest problem you've seen by a company or the biggest mistake a company made trying to attract investors from abroad? Tim, why don't you start?
Look, I think it's pretty key to understand what sector you're operating in, where you want to go, and where you want to be, and what investors you need. So to me, it's a kind of relatively complex.
Basically.
No, it's a complex. I think it's a very complex considerations, and it's a complex matrix between what sector are you, kind of a digital, are you an app, are you kind of a SoundCloud or a Dubsmash, 2 of our investments, or are you much more of an e-commerce model? Are you kind of a local German online real estate agent? So I think there is no one size fits all, and I think my default answer would be for a seed stage company and probably in an early A. You're oftentimes, I think, better off with a European or local investor, and I think we're fortunate to have a pretty big scene of new funds, of seed funds, Series A funds in Berlin or in Germany in general. So I think it's a very careful consideration that you need to make. And if you're in a very specialized sector where you feel only experts are in the US, or if you're in a certain vertical where you think maybe your end market will be the US, let's say in the SaaS market or software and more broadly, then it may make sense to take on international US money more early.
Okay, so you say post-Series A, find the investor that fits, but only if you have a business that can scale internationally.
Yeah, Series A or beyond.
Okay.
Exactly. Yeah.
Great. So you've worked with international investors in some of your companies, being based very much here. I think the portfolio is mostly in Berlin as well.
Yes.
What were some of the issues attracting those investors, or was it easy for those companies to attract the international investors?
I mean, it's never easy to attract, I would say, investors. It's kind of a painful process for the entrepreneur to go through that fundraising process. So I must agree with Tim that in the beginning, it definitely makes sense to stay local. I think, reduces the cost, make things faster. You probably, as an entrepreneur, will have a much larger network in your local area than somewhere abroad. I think it was also never been, we never had so much capital being deployed as we will have right now in the next 5 years in Germany and also in Berlin. We have like a couple of billion euros have been raised in the past couple of years by VCs. So I think right now it's probably the best point in time to be an entrepreneur in Germany and Berlin in terms of fundraising. And once I think you conquer your local market or you figure out your product market fit, then and if you think that you want to attack the US and US is a big market for you and it's an important market for you, then I think it definitely makes sense to go and approach US investors to break into the US, but not too early.
Okay, so you echo Tim's comment, don't go too early. It's a painful process, more painful than raising locally, and we have billions of euros in new funding in Berlin, so why go abroad? So, John, why go abroad? I think the question is, in this case, would be, how did GoEuro manage to attract the pretty much only international investors, so almost exclusively, apart from some angels? And why do you think GoEuro was able to do that so early on and at such a scale?
Yeah, I don't think there's one right answer for that, but at the same time, and I don't want to generalize, but
I'm not generalizing for other companies, just for GoEuro.
Yeah, specifically for GoEuro. I think the problem that we're tackling is extremely massive. It's a massive scale problem of connecting all railroad companies and bus companies onto one platform. Mm-hmm. And I think the magnitude of the scale spoke to some of our investors. And in general, kind of following on to the next question, the reason why we felt that it was among others, that we felt that it was a great time to bring in such investors was simply because of the network that they brought, the power that they had with this network. To the extent that we want to get in front of a thought leader in a specific sector, we feel that we can reach out to any of our investors and they can connect us to whether it be a thought leader based in the US, based in Asia, anywhere. To the extent that we want them to open up potential partnerships for us globally, we know that they're always available there to help us.
Mm-hmm. Great. So do you think, Friedrich specifically, do you think there is a reason for someone to take international money or specifically seek out international money only in the very early stages? Because I think a lot of folks here probably have more early stage startups. They're not at kind of the Series B, C type level to raise from similar investors as you have. What do you think is a benefit of doing that early on, internationalizing your investor base?
If you have a network out there, let's say talking about the US, if you have a network in the US, then definitely, why not reach out to this network and see what the feedback is. But I don't see in the early stage where you're still trying to prove that your product works, that you have a use case, that you have traction. I don't see why you should try to build a network outside of your local area in order to raise money. I think that will cost you a lot of time, and it's going to be time where you'll not be focusing on your own startup. And like I was saying in the beginning, there are so many VCs right now. The angel scene in Berlin or in Germany, especially now in Berlin, is becoming bigger and bigger. So why should you, in the early stage, pre-Series E, pre-Series A, pre-Series B, why should you go abroad and raise capital? Unless if it is a product that is catered to the US industry, for instance, in a US specific case, then it would definitely make sense to go and talk to a US investor because this is where they can help you break into that market. But so if you're raising Series A, pre-Series A in Germany, and you want to go abroad, then it definitely makes sense to approach US investors. And I guess that if you have strong VCs and a Series A VCs, they'll definitely help you to build that network in the US, which is not easy to do.
Right.
It's costly.
Okay. So Tim, you guys invest very early in the US. You don't invest that early anymore, say, as you used to in Europe. Is there a specific reason for that split, or is that more perceived than actual?
No, I mean, first, just to add to what Friedrich said, I think for an entrepreneur, it's incredibly important to think, what do I want from an investor, right? Do I just want capital? Do I want a network, as John said? Do I want access to people? Do I want operational support? Do I want support on talent and hiring? So a lot of times I see also a correlation between maturity of the founder and the willingness or ability to attract international capital. If you're not a very experienced founder, it probably makes sense to take more local money because the investor out of the US, out of the West Coast, is not going to hold your hand and provide you a CMO or CTO candidate in Berlin. It's just not going to happen, right? So it depends a little bit on what you want. But to your question specifically, look, I think we're always true multi-stage. So we start from seed and we go to right up to pre-IPO, given we have the two funds we invest out of. Seed is probably more an exception. If we feel there's a really strong team that we know from somewhere, there's an idea that we really, really like. So give you an example, Bonify in Berlin, where we put a couple of 100,000 in as a really kind of almost seed investment. It was very early, but it's more an exception because ultimately it's a question of resources as well, right? You can't just make so many investments as an investor and spend quality time with the entrepreneur. So we want to ensure that wherever we invest, the entrepreneur feels we're really there for him and supporting him.
Okay, that makes sense. Any comments?
Yeah, I guess echoing to Tim's comments. It's not just supporting, I guess, the founder, but it's also supporting kind of the core leadership or management team, where I guess investors are, at least for GoEuro, quite helpful. A business is always changing, and the way you manage your team as you scale from 10 to 20 to 30 to 100 evolves, and you're going to face challenges, both as a founder and as a business leader. It's been particularly helpful to know that I can not only reach out to them for our core business, but also for personal growth. They can connect me to a mentor at another tech company globally that has faced the same issues, that has scaled from a 10-person company to a 100-person company. It's two emails away to reach out to any large tech company to ask, hey, how do I tackle this problem? I know you face similar issues of scaling. I just wanted to get your opinion on this. And that's where it's been particularly helpful, I guess, to work with the investors that we do have.
Okay. So we're always talking about the US here. I think one step closer, and that's where Index is based, is London. I think there's been an incredible surge of UK investors investing here. Do you think that the investment style is different from the funds or the angels that you have here? And do you think there can be benefits of either style, benefits of either of either base? I won't start with you. I'll start with Friedrich.
Well, I think what we're seeing now in Berlin, what's happening in Berlin right now, is that the newest funds are being raised by full-blown entrepreneurs, and I do think that people that start their own company, they exit their own company, they might have a different. They see the company, they see the startups maybe with different glasses. Through different glasses, and I think this is also something that you see right now in the US. I mean, a lot of these large funds also have been run by former entrepreneurs. So I do think that we'll start seeing like these entrepreneurs now managing funds, investing in startups that probably in the past were not necessarily backed by VCs. So I think we're now in a phase, in a transition phase. And we're definitely going to see some changes within the next couple of years in terms of what type of startups are being invested, what type of support these funds will give to the entrepreneurs. But yeah, it's just the very beginning right now.
Okay. So, sorry, Tim?
Yeah, look, I think it is, to me, it's quite complementary. So you have probably quite a few funds or angels here in Berlin and Germany who are looking more for an opportunity that is not necessarily at the outset has international global potential, although obviously that's great if it happens. I guess our kind of investment mindset is clearly finding kind of potentially global leaders, but having the strong conviction that those can grow up anywhere. They can grow up in whatever, in Munich or in Berlin or in Aachen, wherever they may be. So I think we're looking for a slightly different company maybe than some of the more Germany-focused VCs. And our reference point is always, is this a company that we think can be a global leader? And how does that compare to companies that we maybe have seen in the US and France or the Nordics?
Yeah. And do you think that you can have an impact on that too? So can you help people, or can you help people scale or think more globally from the get-go? Or is that something that is inherent in the business or inherent in the founders?
A good question. I think it partly needs to be inherent in the ambition of the founder. I don't think you can change ambition levels necessarily. I think you can help them on the way. And I think that's obviously part of what we are doing, is helping European companies go to the US and US companies come to Europe. So.
Mm-hmm. Okay. Getting access to folks who are not necessarily a EasyJet flight away, but who are maybe in the US, maybe in Asia. How would you go about it? How would you coach your entrepreneurs, or how would you, also coming from the capital side, suggest to an entrepreneur to run the process to get international money on board? Friedrich, why don't you start?
I think if you wanna, we're coming back always to the first question. Like if you wanna raise international money or money from international VCs, I think you need to be a certain in a phase of your company where you have traction, where you have proof of concept, and where it makes sense then really to approach VCs out there and try to raise money abroad. I would be again very, very careful in terms of going out too fast, going out of your local market too fast, because that might definitely jeopardize your business and put your business at risk. In terms of how to find the right person out there, to find the right VCs, usually it's through networking, right? Attending these events, meeting Timm, talking to investors there, have their dependencies also in London, also in Berlin, and meet them here and try to network with them, and then get introductions, recommendations to investors abroad. I think I'm not very keen on recommending entrepreneurs just to send emails out to info@ and try to see if you get traction. Ideally, you get an intro to someone, and that would definitely help to get proper feedback and also quick feedback.
Okay, John, what would you say?
Yeah. For me, I don't think the focus should be on raising from either international or local investors. It's more kind of echoing on Friedrich's comment, build an incredible product, build an incredible team, and that should be the main focus. I also think it's a chicken and egg situation where, to the earlier question, there's more investors from London, from the US coming to Berlin, simply because the talent is really here. It's an incredible scene, but it's a chicken and egg situation in that if you attract international investors, that naturally brings in more talent. But in order to get the money, you need the talent there to begin with. So if you focus on hiring the right people, building the right product, I think naturally this is kind of an offshoot of the incredible company that you're building.
Okay, so and then does it need to be more incredible or different incredible to attract those international investors? Or do you think there's a certain inefficiency in the market, that's why these folks are coming over, investing here? Do you think they're better investors? Do you think they just look for other stuff? What's the direction the company should focus on?
I think historically European companies have been very efficient in how they use their capital. And I can speak to Berlin since we're based in Berlin. Companies are taking advantage of the lower labor costs, lower cost of living to really build incredible companies over 18 to 24 months. I don't think, and I don't want to generalize, but it's very hard to replicate this in New York, London, or Silicon Valley, where the cost of living is relatively higher. I think investors start to see that where there's a little more runway for the companies that they're investing in. As in, they've raised, the companies historically in Europe raise smaller rounds as well, but these rounds are, I think, increasing more and more over the past couple of months. And this is because I think investors are starting to see the opportunity that lies in the continent.
Okay. By the way, if you guys have questions, start thinking about specific questions to specific people on the panel, just so I can call on you in a little bit. Okay, thank you so much. Do you agree that probably the international investors won't have to be as active here in the future? Because I think we've got something like 2 billion in new funds raised in the past 18 months. Do you think the competition is going to increase, or?
No, I think it's slightly different. I agree with you, there is much more money available, but I think we all are working on and hoping that that also means that we have more sizable opportunities, larger companies that are attacking larger markets, and that potentially are consuming more cash to build really large outcomes. Because I think we want to follow the US example, where obviously the exits and the outcomes have been way more significant. So I think I don't think we're independent. I still think, particularly in the larger kind of B, C rounds, there's still some dependence on international money, and particularly US money, just because the venture scene there is just multitudes bigger than Europe. So I don't think we make ourselves independent. I think we're just able to create more companies and build them up faster and hopefully create larger outcomes, because we have a solid base of European investors.
Okay, that makes total sense. So any questions from the audience yet? Think a bit harder, guys. Perfect group of people to ask about this. So I think we all came to the conclusion, okay, if you actually want to attract international investors, you need to have a business of certain characteristics. That means you need to think global, as in a global product with a global customer base. You need to be scalable enough, as a company to attract large sums of money, or to be able to do something with large sums of money. What are some of the issues that you see, at the kind of the fork in the road for a company to say, okay, we're going to go after the somewhat safer local market, or we're going to risk it and go for the bigger outcome with a global business? Is there usually a point in the company's trajectory where you can see that decision, or is it built in from the start?
I think it's a hard question. I think there are, particularly in more digital models or software SaaS models, I don't think necessarily you have that fork in the road so much. I think you have that much more for consumer internet type business models, where I think it's incredibly important to have a very solid base in one country or one sector before you really go broad and internationalize. So I think that's what also a lot of international investors and US investors want to see, that you have a strong core and you can build upon that core. And whether that means a different sector or a different geography, I think that's then the fork in the road that you need to make a decision upon.
Okay, so it's more inherent in the underlying business.
Yeah, it depends more on the business model, I would say.
Yeah.
And I guess you see that too, right? I mean, I think, I'm a huge fan of also, like, in the very beginning, bootstrapping things and not like forcing things. Even though, your business analyst is saying that, there's a huge market out there and you see that there's a huge company growing abroad. I think I like to see things happen organically, and like one of companies that we're invested in, like Purdue, they have a large base of customers right now coming from the US, for instance. So it could be the next logical step then to have an entity in the US and start fostering the market in the US step by step. So I prefer much more that type of approach of understanding your customer base, seeing where your customers are coming from, and then taking the decisions, where should I go to? Not because US is a big market necessarily means the US is a good market for my business model. So, and this is how I like to build startups, how I recommend actually entrepreneurs to build the startups, in the very beginning to bootstrap and look at their numbers and grow ideally organically. And if you see that things are taking off, then raise capital, raise funds to accelerate that process.
Okay, John, so I think GoEuro raised 27 million in Series A funding. That's certainly not a bootstrap business. How do you go about internationalizing? Do you guys, put bodies in the street, open offices in 20 countries? What's the what do you guys do with that money, and how does it go towards international versus local versus something else?
I would say we won't be opening international offices tomorrow. I think we are, at a core, we're all based in Berlin. The whole company is based in Berlin. We are a European company, built in Europe with European engineering. I think regardless of whether or not we have international or US capital, that doesn't suddenly force us to then open up offices internationally, hire US talent. I think inherently we want to continue to build in Europe. For us, our clients are based in Europe. We work with state-owned railway companies and bus partners who are based in Europe. It also signifies to them, if we move over to US and our operations are overseas, it signifies to them that there's some disconnect, not just from the pure distance that we're away from them, but that we're not really focused on Europe. So for us, even though we've attracted international money, our focus is, I guess, being a European-based company, being European-bred, and all engineering team that's from Europe.
Right. So we've now talked about this corridor, Berlin, London, San Francisco, I guess. What about the other way? Do you have experience working with investors from Asia, from the Middle East, from other places, and what were some of the learnings there for either of you?
So from our perspective, we have a very good relationship with some of the largest sovereign wealth funds in Asia and Middle East, that they tend to look for very late stage opportunities. Very rare actually that we come across any investors who spend significant time here on the ground. And I think the reason is just that the opportunity in China or Southeast Asia is just so large that they don't feel the need to come to Europe, right? If your economies are growing 5 to 15%, why go and invest in economies that grow 3%? So it's a bit hard, I think, to make the pitch. So no, on the early stages, nothing that I've seen. Maybe someone like a Horizon is an exception there, but otherwise it's really for very late stage pre-IPO opportunities where guys like Temasek, or obviously you saw the Saudi investment in Uber are clearly there, but I think they also, from their infrastructure and how they're thinking, they think much more about numbers and really large late stage opportunities.
Mm-hmm. Okay.
Well, not for us now, we don't have the experience in terms of investment, but what we see is that especially right now in China, there's definitely a lot of, many companies looking at their business models and also how to internationalize their models, like how to go to the West, how to conquer Europe, how to conquer the US. So we definitely see some inbound activity of Chinese investors interested in M&A activity, especially to internationalize their business models. Mm-hmm. Because it's for Chinese companies quite tough to set up shop in Germany or in Berlin and build things from scratch. So for them, it's the logical step will be to acquire and then with the acquisition internationalize. So we're definitely seeing some interesting inbound activity, but no experience with investing so far.
Okay. You guys?
Yeah, I would echo Tim's comment in that I think historically Middle Eastern and Asian investors invest later stage. I think this could also change in the next 3 to 5 years. We've seen this in family offices in Europe and overseas in the US, where historically they used to write larger checks for companies that they would hold for 10, 20 years. But now family offices are investing more in early stage startups in Europe and US. This just shift in perception of where they see the opportunity could potentially change as well, I would say, in the Middle East and Asian investors.
Okay. Good stuff. Any questions from the audience?
So I think I understood that there's a point when it's too early to talk to international investors. And I was just wondering if you can say if it's too early, if we have a prototype and we want to get into the market, is that too early to talk to international investors like you? So
to clarify, you want to get into the market where these investors are based?
Yes.
Okay.
So I can comment. I've had an experience when I was at Goldman Sachs where a founder presented his company, and it was a bunch of JPEGs that the founder had created, and it was an incredible pitch, and the vision was there. We ended up not investing, but the fact that there wasn't a product itself wasn't really a damper on us. I think it's more about kind of the trajectory and the growth potential that investors see in your vision and your product. And I personally always like kind of the MVP approach. Show them what you have, show them the vision, show them the team and the product you want to build, and it all starts from there.
Look, my answer would be depends on your team. If you have a super experienced, seasoned team, they know what they're doing, and really the only thing you want is capital, then yeah, by all means go and see international investors. If you feel you need a lot of local handholding and support on talent and recruiting, market entry, partnering, then probably your local investors is better suited.
Yeah. I think, I mean, there's one example, for instance, it's called Tap Talk, the application. They're like from Amsterdam, then based in Berlin, and now they actually moved to Silicon Valley, and they raise money in the Silicon Valley, and now they're based there. So they have like a killer team, strong technology in terms of video communication. It was good timing, good technology, strong team, experienced entrepreneur. He managed to raise funds abroad and move the company to San Francisco. And I also think if you're talking about early stage, and you want to raise funds abroad, if that's the case, then most likely you need to move operations to this country, if it's US you're talking about, for instance. So you need to also make sure that should be part of the equation.
Yeah, if I may share an observation, what a lot of people do, especially when they raise money through AngelList, we have a lot of local strong angels that might have a network somewhere else. So it's always easier to convince someone who's close to you, as Tim said, who's closer to you because you can get access through your own network. So you get a warm introduction or you already know the person. You convince them and they help bring their network in. So you might want to focus your initial search of investors also on people that are based here that might be able to help you make that jump.
I mean, taking America as an example, Americans start their business first in America, and then they expand into potentially Europe.
Right.
And I think Germans maybe should start their business first in Germany, and then potentially expand it to America, if that's the case. So I think that would be, for me, the most logical step.
Makes sense. Any other questions? All right. Well, in that case, I think we can wrap up. I think we agreed in the end. You need the right investor at the right stage. So you need to find someone who's actually focused on the businesses the types of businesses that you're building. You should approach international money only if you're actually building an international company with a global reach. And differing opinions on bootstrapping versus raising money early, but that's fine. So thanks very much, guys.
Great. Thanks, Philipp.
Thank you.
Thank you very much.
Thank you.